Hi, dear partners. A very good afternoon to all of you present here today. On behalf of the whole Samco Mutual Fund team, I would like to thank you for taking out time this afternoon and attending our first NFO Digital Meetup. I am thrilled to present India's first and only active momentum fund. Yes, I repeat, India's first and only active momentum fund. And to deep dive into Samco Active Momentum Fund's strategy, I have with me Viraj Gandhi, who's the CEO of Samco Mutual Fund. I would request you all to please keep your phones on silent, and we will take and accommodate mostly all the questions towards the end of the presentation. I would recommend you to use the Q&A feature in the Zoom and post all your questions there. And post the presentation, I'll take up all the questions along with Mr. Viraj Gandhi. Thank you so much for joining in once again, and over to you, Viraj.
Thank you, everybody. Namaste. Sat Sri Akal. I am in the north of India. That's why I'm using this particular language. I'm very excited. I'm very thrilled that for the first time, I'm going to unveil a strategy जो फिलहाल at this point of time is not available in the entire mutual fund industry. So thank you once again for your time and effort for this particular hearing. I'll directly go to the subject matter. Let me use a particular frame from one of the greats of all time, Sir Benjamin Graham. He said that in the short term, market is a voting machine, but in the long run, it's a weighing machine. What do he mean by that is, in the long run, the fundamental of the company, the corporate governance of the quality of the company is the most important parameter to buy a particular stock. And then you just need to buy and hold it with a very low churn in that particular strategy. But he also mentioned that in the short term, market behaves like a voting machine where there is no relation to the underlying fundamental or the quality or the corporate governance, but it is based on something what is very popular in the short term, and there the churn or the turnover will be very high. Using the same phrase, using the same analogy, and using the same understanding, we at Samco Mutual Fund are proud to bring you the second part of the strategy. So when I came to you people for the first time during my first NFO, which was FlexiCap, and the second NFO, which was ELSS, we only spoke about the buy and hold time-tested, hexasil-tested strategy, which was like a weighing machine in the market. But today, as Chirag told you, we are going to talk about India's first and only active momentum fund, which is going to be part of my distinctive pattern strategy. So what do I mean by that particular thing is, I am going to take an understanding from one of the Nobel laureate, Sir Eugene Fama. He in 1970 said that markets are so efficient, and in a very simple language, he explained that the security price at any point of time reflects every available information, meaning nobody can have an edge and nobody can generate an alpha. In Hindi, अगर मेरे को ये हिंदी में समझाना हो तो जो भी प्राइस है स्टॉक का आज, उसमें सब कुछ फैक्टर्ड इन है और कोई भी अल्फा जनरेट नहीं कर सकता. That is what he said in 1970, for which he was been awarded a Nobel Prize. But for the next 30 years, he kept challenging his own finding. And somewhere in 1998, he said that there is one thing in the short term that can give you a very high alpha, and which was very persistent. And the most persistent anomaly in the market was momentum. That is what he said. And this is said after testing 215 years of history across different asset classes, be it currency, be it commodities, be it stock market. And then he said that momentum is the key anomaly to create that kind of an alpha in the short period of time. Now let's understand what is momentum. What do he mean by momentum? Momentum simply refers to a tendency of winning, meaning if you are in form, you will remain in form in the short period of time. And if you are out of form, you will remain out of form for a short period of time. Meaning, अगर हिंदी में मुझे समझाना हो तो अगर आप फॉर्म में हो तो आप शॉर्ट टर्म में you will keep performing. But if you are not performing, अगर आपका फॉर्म नहीं है तो शॉर्ट टर्म में you will again not perform. And to use this particular thing, only by using this particular understanding, you can create that alpha in the short period of time. Let's understand momentum even more simple. It is about people have to pick the players who are in form and you have to drop the players who are not in form. If I have to give you an example on the cricket side, these are the two players, Prithvi Shaw and Shubman Gill, who both represented India on the Under-19 World Cup, which India actually won. Prithvi Shaw was the captain. He was given a chance in the Indian cricket team somewhere in October 2018. Shubman Gill got the chance to represent India somewhere in January 2019. But because of the lack of form, despite having a lot of overs on his side, Prithvi Shaw has actually represented India for a very less number of matches. To be precise, 12. And Shubman Gill today is not only opening a T20 game, he is also going to open a World Cup team, which is what we are going to play, the World Cup T20 World Cup test match finals, and also going to open in the ODI team for India, because he is depicting form and consistency, which is a true nature of a class player. So just again putting it very, very simply, momentum investment, meaning picking up the stocks which are in form and not picking up the stock which are not in form. But this is what I am talking to about on the cricket anomaly. But let us see whether the same works in the markets or not. So this is the extract from the MSCI website, which says that historically momentum has been one of the strongest generator of excess return for them. And how much excess return are we talking about? Since 1994 till date, if you see the red graph, it has given a 10x return. From 1994 till date, the MSCI World Index, the World MSCI Index, which people follow very, very aggressively, very, very closely, has given a 10x return from 1994. But during the same time frame, the momentum index of MSCI has given a 20x return, which is huge, phenomenal. This was from the World Index, but let us see whether the same thing applies in the Indian stock market or not. There are two momentum index listed on NSE, the mid cap 150 momentum 50. And if you want to see the performance since inception, it has given a price return of 21% CAGR and a total return of 22% CAGR. And the second index, Nifty 200 momentum 30 index, has actually given a 17-18% kind of a CAGR return, but a total CAGR return of over 19%. So if you want to compare this both index with a Nifty return and a Nifty 500 return, where both of the other indexes have given only a 12% CAGR, both of this index has actually given either an 18 or a 21% CAGR over the last 18 years of time frame, which is huge, phenomenal, and commendable. How have they defined momentum? Is they have taken an average return of the past 12 and 6 months price return and divided by standard deviation. And they have given a normalized momentum score to a particular counter. And only if you are higher in the score, you are part of that particular index, whether Nifty Midcap 150-50 or whether Nifty 200 momentum 30. But we want to see whether it has been widely applied or not. If this is the kind of outperformance, agar ye itna outperformance deta hai, then there should be flood of funds in that particular segment. But आपको ये जान के surprise होगा कि there are only 6 mutual fund. Yes, there are only 6 mutual fund जो आज के डेट में पैसिव मोमेंटम में फंड आपको पॉसिबल है in terms of availability, but the total AUM for these 6 funds is only 2200 odd crores. So ये जान के थोड़ा सरप्राइज होता है. It's a very surprising factor that despite such an outperformance, ये segment में there are only 6 schemes available from these 6 different manufacturers. Now why? पहले ये जानना जरूरी है. Let us first understand why does momentum work. Momentum works because of the behavioral bias. What is behavioral bias is कि मैं अगर कहीं पर भी जाऊं, I want to buy stuff at a discount. I want to buy a 100 rupee MRP thing at a 70 or 80. This is exactly the opposite of what momentum is. So I will give you one example. Let's say I have two trades. 100 रुपए पे मैंने दो कंपनी लिया, company A and company B. If the company A goes from 100 to 120, I will actually book profits. But if the company B goes from 100 to 80, I will take the trade back home, which is completely opposite of what momentum is. In momentum, I should have been able to take home 100 से 120 जो हो गया, I should take that home and I should actually cut down the trade जहाँ पर 100 से 80 हुआ. And another bias is I will rather not buy stuff at a 52-week high. I'm happy to buy stuff at 52-week low. But in momentum index, in momentum trading, you actually have to find stuff which is actually going up and is available at a closer to 52-week highs. And another important parameter which differentiates, which is not helping everybody to talk about momentum so much, is information diffusion. What is information diffusion? Is the flow of information. Information first goes from a promoter and an insider group to a smart individual who are close to the promoter group, then to an institutional investor, and then finally it comes down to a retail investor. If I have to explain this particular analogy of momentum, if you see this particular screen, then on the left side, there is a plane where the wind is flowing behind the plane. If the wind is coming behind the plane, it will actually reach out to its destination faster compared to the second scenario where the wind is actually flowing against the plane. So it will also reach out to its destination, but it will take a longer period of time. Now this wind is momentum in our language, money chasing that particular stock. So I'm very happy and thrilled to announce India's first and only active momentum fund in the particular category. And to explain this particular category, I'm going to play one video, a visual, which will explain everything in a very, very simple format. And this visual is right now available on most of the marketing channels, be it media, be it TV, be it, you see it, you will see us everywhere. So without taking much time, I'm going to play that particular video. And after that, we are going to discuss the entire strategy in detail.
Okay boys, let's get to it. इस बार टीम सिलेक्शन फॉर्म के बेसिस पर होगा, पास्ट रिकॉर्ड्स और पॉपुलैरिटी पर नहीं. There's only one change in the team. सूरज will play in place of Ravi.
कोच, ये रवि को बाहर छोड़ना सही है?
मेरी एनालिसिस कहती है कि सूरज फॉर्म में है और अच्छे रिजल्ट्स के लिए फॉर्म देखना जरूरी है, नाम नहीं. कुछ इसी तरह फॉर्म में प्लेयर सिलेक्ट करने का फंडा इन्वेस्टमेंट में भी है. वेल्थ क्रिएशन के लिए सैमको पेश करता है इंडिया का पहला एक्टिव मोमेंटम फंड जो स्टॉक सिलेक्ट करे उनके फॉर्म और मोमेंटम पर. आज ही निवेश करें. म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है. योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें.
Guys, I'm also proud to announce you that we are going to be the official co-sponsors during the World Test Championship final, which is going to be played between India and Australia from 7th to 11th of June in London. And the same communication will go to all our clients very, very aggressively. So let's come back to the strategy. So before I go back to the strategy, I'm going to give you some disclosures over here. During the course of my presentation from now on, I'm going to take a lot of stocks examples. These are neither a buy recommendation, neither a sell recommendation from our side. These are just used for the sake of giving an illustration, an example to convey a particular message. So what is the strategy that we have built in-house at Samco? So at Samco, we have built 3 engines. The first engine is a signal generating engine, which tells us where the momentum is getting built based on the price and volume action. The second engine, which is a positioning, sizing, and the risk management engine, actually tells us how much position can I build in that particular engine. And the third one is portfolio management engine. So I'm going to explain each one of these engine in detail from here on. So based on the lot of data points which I told you, few of the data points I've listed over here, we look at the price and volume action very, very closely. We look at insider trading data. We see bulk deal, block deal. We see money flows. We see the sectoral and the broader market indices. We see the FNO data and the open interest data. We see the shareholding pattern. And a lot of this is been part of the mix that we have tried to communicate. So what are we going over here? So the first thing that we want to see is where the momentum is getting built. The second signal we want is a confirmation signal that yes, this momentum is here to stay and we have a follow-up buying. Because of that, you will see enough and more strength in that particular company, in that particular counter in the near term. Very important, this should not be in a secular downtrend. See, understand, even if the stock is in a downtrend, there will be spikes in between. We don't want to catch this part. We want to be participating in a uptrend cycle where we are getting enough and more signals. And after all of that, we have put some quality check over there, a basic quality check. And we also do not want to participate in an illiquid counter or a circuit to circuit stock, so that at the end of the day, this do not become a sectoral fund. And we do not want to be part of a very, very overextended move. A stock, let's say, for example, a stock has gone up from a 30-40 rupees to 150-160 rupees in a short period of time. It has already gone up 5x. And we are late to the party. Then typically we want to avoid participating in that kind of a move. So let's come to the first signal. The signal that we generate where we come to know what is happening in that particular stock. So as Gujarati mein bolte hain, bhav bhagwan hai. What do I mean by this particular thing? That God knows everything, meaning the price that is trading at this point of time knows everything that is available in that stock at that point of time. You want your trend to be your best friend. You don't want to go against the trend. That's why I told you we will typically participate in an uptrend and not in a downtrend. We also said that momentum, by definition, the trend persists in the near and medium term. Meaning if something is going up, it will keep going up in the near term. If something is falling, it will keep falling in the near and medium term. Information diffusion, which I already explained, the information reaches out to everybody at different points of time. And very important, we need to allow our winners to run and cut down on our losers. So as I told you, I'm going to give you a lot of stock specific example. Again, for the sake of disclosure, these are neither a buy recommendation, neither a sell recommendation from our side. I'm just using this example for the sake of an illustration from here on. So what do I mean by information diffusion? This is an example of alkyl amine. Somewhere in April 2020, we got this buy signal. This chart that you are seeing is a buy signal from Samco's proprietary indices. And typically we saw this kind of a run in the stock afterwards. But if you want to see fundamentally, when we got this particular buy signal over here, fundamentally afterwards, in the next 2 quarters, when the stock was running from year to year, company has reported very bad set of numbers. If you see this number, they were negative. And then all the positive results started flowing in. But since September 2020, see somewhere here, the top was being made and the stock only started coming down. This clearly means that information is not getting diffused at the same time to everyone. So we need to catch this kind of a move somewhere here so that we can ride on to this kind of a move and exit only when the scores, the momentum score for that particular counter is falling, and not look at the information at that point of time. If you see the chart of Balaji Amines, you will see similar such thing happened during the same time frame with Balaji also. We got a buy signal somewhere over here. The next 2 quarters, the results were not positive. And we saw this kind of a output or the financial results afterwards, but then the stock never went up. And if you see the coverage on Balaji Amines, the first or the second coverage, everything came at the fag end. All the analysts actually started working up over here, but the stock was already in this momentum here. So this type of strategy that we have built is we want to capture this move. We want to capture this move which persists in the short period of time. And that is the kind of thing that we are going to bring to you by way of active momentum strategy at Samco Mutual Fund. The second part of the strategy I told you, let our winners run and cut down on the losers. Continuing with the same example, somewhere in April 2020, we got 7 signals. Alkyl, Balaji, Pfizer, Torrent, Colgate, Laurus Lab, and Aarti Drugs. We entered most of them somewhere here in April 2020 when we got 7 signals. But we exited 3 positions out of it after 3 to 4 months. Pfizer, Colgate, and Torrent. Because they lost momentum afterwards. If you see the red dots over here, the red circles made over here are our exit signal. So this is what we mean by it, that I have to allow our winners to run. So we allowed the 4 positions, Aarti, Laurus, Alkyl, and Balaji to run for the next couple of years till the time they were in momentum. But we exited the position like Pfizer, Colgate, and Torrent because they lost momentum immediately afterwards. So this is second important parameter, which is very, very crucial and important when we want to generate alpha in a short period of time. Now, what do we mean by position sizing and risk management engine? So taking deep dive into this particular strategy, we want to understand the size of the opportunity. What do we mean by size of the opportunity? Is the market cap of the company, the free float of the company, the average delivery volume of the company in the past, available data of the last 3 months, 6 months, and a year, so that we understand how much can I participate in that particular up move. Second thing, we want to see the probability of success. Probability of success is very dependent on the kind of up move and down move you can expect in that particular counter based on, if you remember the formula that I told you about momentum, we have to divide it by standard deviation. So probability of success is dependent on the denominator. Potential downside risk is similar. We also test the liquidity. As I told you, the available liquidity, the volumes in the past 3 months, 6 months, and 12-month period. And based on all that thing, we have kept the weightage per company and also per sector, so that this does not become a sectoral fund. So if it is a large cap, the weight will be higher. If it is a mid cap, the weight will be lower. If it is a small cap and micro cap, the weight will be even lower than that in terms of my overall portfolio management scheme. So the third engine, the portfolio management engine, will actually allow my decision making very, very easy and simple. That if I bought something based on the particular signal that I've got in the previous two engine, and if it is doing well, I will keep holding into it. And my total exposure to the market will be dependent on the strength of the momentum. So what do I mean by it is, if I've got a particular company and the momentum strength is good, I will stay invested. But if I've got a particular signal and the momentum strength is falling, then this fund will work like an arbitrage to protect the downside. So let me give you an example of 2008 and 2019. My backtested data shows that this strategy, if it was applicable in 2008, at the beginning of the month, I would have had 42 positions open. But because the strength was falling, because the Z score was falling, I would have exited 34 positions within the same month, and I will be holding only 8. But post this particular phenomena, we saw another 43% fall in the overall market. And if the overall market is falling by over 40%, you must imagine what would have happened to a lot of small cap, mid cap, and the smaller counters. So during this point of time, it is very, very important to work like an arbitrage fund. Just to give you one more example of 2019 COVID crash, at the beginning of the month, somewhere in March, okay, we had 40 open positions. But because the strength was falling, because the score was falling, we exited 29 positions and we only were holding 11 positions. And after that, we saw another 24% odd correction in the main broader index, and the stocks were all over the place. So during that phase, you want to work like an arbitrage. Now, this is so far what I tried to explain you is what is momentum. The bigger people have defined momentum in a very, very simple way. It works in cricket, it works in market. It has worked brilliantly across the bigger indexes of the world, so-called MSCI. It has worked in the Indian 2 momentum index also. And this is how they have built over a period of time. What are we doing at Samco Mutual Fund when we told you that we are going to be the India's first and only active momentum fund? We are going to do 5 things differently than this particular passive momentum index. With all due respect, the passive momentum index, even after all these flaws that we are going to discuss now, is still delivering a 20% plus CAGR since 2005, which is huge, phenomenal, and commendable. But we at Samco Mutual Fund, after deep diving into that particular data, found that if I have to build a momentum index, a momentum strategy at Samco, I should not be restricted at the top 200 Nifty names or the mid cap 150 names. So if I just give you an example, what is happening in the market currently? Nifty has gone up by 5% in the last 1 month, more or less. But the small cap index of Nifty has gone up by over 11%. And a lot of stocks has gone up by 20-30%. So if momentum is getting built, you want a wider universe. So we at Samco Mutual Fund have decided to have a Nifty 750 stock instead of mid-cap 150 or Nifty 200 stock. So we are going to widespread our wings, and we are going to work in the Nifty 500 plus Nifty 250 small cap, a micro cap name after that. So this is the first difference. The second difference is, if I'm in a good market and if there is momentum all across, and if I have money and if I have the indicators, I should not be restricted by only 30 and 50 names. So if I have more money and if I have the indicators in place, agar time acha hai, agar momentum hai, this is the time to capture momentum. Go ahead, create as much alpha as possible in a short period of time. And to do that, you should not be restricted by a number of 30 and 50. So we at Samco Mutual Fund have not fixed any number. The number will be fixed based on the capital and position sizing that I explained you in engine 1, 2, and 3. So we are relatively nimble by as far as the number goes. This was for a uptrending market. Now you think of a downtrending market, a 2008 scenario or 2019 scenario, which I just gave you. Having a 50 stock in a downtrending market is detrimental to growth, is criminal. It is not correct. And that's why we should not hold so many stocks in a bad market. So not fixing a number in this kind of a strategy is the key and is the crux. Going one level up, because index has to create a stock of 30 and 50 to create that particular index, they are using only relative momentum. What do I mean by relative momentum? If market is falling by 50%, a stock is falling only by 30%, the score will be higher. So that stock will be selected in the index. क्योंकि मुझे 30 और 50 कंपनी का इंडेक्स बनाना ही है. But we at Samco Mutual Fund, we are not bound by the number. So we look at relative and absolute performance also. So in a bad market also, when markets are falling, there are few green shoots. There are companies which are going up. So rather than taking a company which is falling less, you should only invest into company which is going up at that point of time. Otherwise, there is no need to invest into that market. So relative and absolute momentum both. Rebalancing a index which is very, very nimble, very, very short term in nature, after 6 months is a huge time frame, is what we believe. Just to give you an analogy, if you have a trading position, can you go away from screen for 6 months? The answer is no. You need to be there. You need to be there so that you can react as and when required as per the available new data. You cannot go away from screen. Yes, if I'm a buy only, long only, a long-term portfolio, then having a 30 and 50 stock is right. Then investing into Nifty 200 is right. Then going away from the screen for 6 months is even correct, but not for a very, very aggressive momentum index is what we are saying. So we at Samco Mutual Fund are going to rebalance it as and when required. We are not bound by a number 6 months. And I'll give you an example of it in the next few slides. What happens if I do this? And investment into a passive fund will always be 100% invested. Be it market will be good or bad, वो हर time 100% invested रहेगा. So it is good in a uptrending market, but in a downtrending market, this is detrimental. So we at Samco Mutual Fund will also be 100% invested if the markets are good, if the markets are in momentum. But during an anti-momentum phase where markets are not good, like a 2008 scenario, a demonetization scenario, or a COVID scenario, we will be working like an anti-momentum fund. So let me give you a few examples over here. So during the periods of anti-momentum, having a 100% investment, a 100% exposure to the market is not going to be good. Now, the second thing that I told you, that passive only rebalances itself every 6 months. So this is the extract that says that passive is going to rebalance either on June or either on December, which is semi-annual. Now what happened? This is the real example. So this is where ICICI Securities actually started running up. The strength and the momentum index showed that yes, it is building up over here. The green one is a Samco indicator telling you to enter. And the red one is the actual indicator that has happened for a Nifty momentum index. So Nifty momentum index actually entered here in December, not here, because they cannot enter before a rebalancing date. And immediately afterwards, if you see, the momentum broke, the score broke, the momentum broke, and the strength was coming down. So we exited. So this was the exit signal from Samco's proprietary index. But Nifty actually exited somewhere in June 2022 after suffering a 46% loss. 46% loss just because they cannot exit before the next rebalancing date. Similar such thing happened in JM Financial also. Both the entries were together, the Samco's proprietary one and the index entry for momentum. We exited somewhere over here, but they exited over here. So the difference between the profit that we saw as per our data was 266% compared to only 76% for the index. Now, when we talk about relative momentum and absolute momentum, this is the best example. When we understood the data that we got from NSE, Schaeffer was the company that was part of that index somewhere here. They entered somewhere here in December. We entered somewhere over here. They exited over here just because the 51st company, this was, if that was the 50th company, Schaeffer, the 51st company was having a higher score. So on a relative basis, they exited this particular company, but we kept holding it because on an absolute basis, it was doing brilliant. So rather than having a 59% higher return than the index actually exited because of the sheer number that they were following, a 30 or a 50, and only by considering the relative momentum. That is what I mean, that you do not have to do this. You need relative and absolute both at the same point of time. Now, what is the drawback of a relative momentum in a bad market? That was a drawback of the relative momentum in a uptrending market. Now, let's see in a downtrending market. Because everything was falling somewhere in 2010, 11, 12, 13, they entered Federal Bank somewhere here. If you see the entire chart, there was absolutely no momentum anywhere in Federal Bank. But they entered it because relatively it was doing better than the other companies. कुछ खरीदना जरूरी था to build an index of 30 and 50. They actually bought Federal Bank, but without having any momentum. But because this trade was then done for a relative momentum thing, they actually ended up losing 27% out of it, which is huge. Just because you are buying, क्योंकि कुछ खरीदना जरूरी है, that's why this kind of losses. Rather, we could have avoided this thing and set on an arbitrage thing. But coming back to my disclosure again, despite all of that, the momentum index is performing brilliant. There's no two questions about it. So understanding that index first, we have also adapted a lot of things from there. But then we have added few more parameters. If you add a proprietary absolute momentum algorithm, which I just shared with you since the past few minutes, and if you rebalance as and when required, you be nimble, you react when it is meant to be, not wait for 6 months. And that is the kind of thing required on the active momentum side. And that's why we are proud to tell you that Samco Mutual Fund is the first and only mutual fund who is happy and thrilled to announce India's first and only active momentum fund. Now, let's understand the scheme details even more closely and the asset allocation part. So please be very, very careful in what I'm going to say in the next 2 minutes. This is a thematic fund. So at any point of time, it requires an 80% allocation on the equity side. So at every point of time, on the gross level, you will see an 80 to 100% investment from this particular strategy. But in an anti-momentum cycle, where the markets are going down, when the momentum has been broken, when the markets are sloping downwards, on the gross level, it will still show you 80%, but on the net level, because of hedging, it will show a relatively lesser exposure to the market to the tune of even 20%. So the scheme may use 100% of the net asset of equity and equity related instrument on the derivative side to take a hedging position is what we are saying. The scheme is right now filed under the thematic category. The benchmark is Nifty 500 TRI. Exit load for the first year is 2% and 1% for the second year. This is as per the SID that we have filed with SEBI. And the minimum investment that somebody can make in this particular scheme is 5,000 and the multiple thereof. The scheme is going to be open on 15th of June and it will be closing on 29th of June. But the most important point is on the right side of the screen, which is marked in red, that the subscription in this scheme shall be restricted post NFO period until further notice. Meaning, अगर हिंदी में मेरे को आपको समझाना है तो अगर आप सिप करो या लमसम करो, you only have a window from 15 June to 29 June to invest in that particular segment. Uske baad SIP या lump sum, both will be restricted till the time we open subscription somewhere later on. Exit is possible. This is not a closed-ended scheme. So exit is possible, but entry, we will time it time to time as per the market scenario. So your decision to invest into active momentum fund of Samco should be based on the particular strategy that I just shared with you, but it has to be done only between 15th and 29th of June in 2023 at this point of time. What is the ideal allocation to this strategy? Let's understand this thing. The ideal allocation to this strategy as for the biggest of the fund managers of the world, AQR Capital, the co-founder Cliff Esnes has said that should be between 5 to 10%. Richard Bernstein said it should be between 20 to 30%. Wes Gray says that it should be between 10 to 30%. And likewise, if you come down at the fag end, Gary and Antonocchi said it should be between 20 to 30%. So this is what I wanted to share with you. Just to sum up everything that I've said so far for the benefit of people who have joined me late, that just like in cricket, form is very, very important in cricket. So you pick the players who are in form and you drop the players who are not in form. Momentum is what we call them as. Momentum similarly works in the capital market also. If you see the data of MSCI, momentum MSCI index has outbeaten the same same MSCI index by 2x. Jhan 1994 said till now, MSCI World Index has given a 10x return. The same MSCI Momentum Index has given a 20x return. That is the kind of outperformance. There are two momentum index listed on NSE, Nifty Midcap 150/50 and Nifty 230. Both of them have outperformed the Nifty benchmark CAGR return of 12% by either 18% or 21% for a long time frame. What is more important is the Samco's proprietary indicator that we have built, which will tell us the systematic entry and exit that we need to create when you are creating this kind of a momentum index where there is no scope for any biases. We have chosen a wider scope of 750, the first 750 Nifty stocks instead of Nifty Midcap 150 or a Nifty 200 scripts. So we are going to play on a wider scale. We are going to capture anti-momentum by being an arbitrage in a bad market. And we are going to rebalance it as and when required. We are very, very nimble in that particular thing. We will rebalance it real time rather than waiting for 6 months to rebalance our portfolio. And very, very important, the scheme is going to be open from 15th to 29th of June. The most important part, there will be restriction on inflow immediately after the NFO period. So you need to react fast and you need to react quickly for your clients. That's it from my side. Thank you very much. Over to you, Chirag. And if you have any questions, I'm happy to take it. Thank you very much, guys.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.